The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Monday, the 21st of April. We're looking at the Dow. Oops, that wasn't the Dow. It was the SPXS up. So the 3 times short, the S&P is up 42 cents at 8:15, up 5.50%. Now, why is that buzzing like that? That's interesting. Is that just me? Yep, I guess it's just me. All right. So as we're looking at this, let's just go to the Dow. I want to show you something very interesting. We'll get this done quickly. The Dow is down 500 and, oh my, look at that. It keeps changing. So that is 672 at 38,474. Arching over in the pattern that I call the dreaded H. I should show it. I haven't shown it for quite a while. So I'll just go to my newsletter right here, and I'll go to this right there. And I'll show you this particular pattern. Straight up, I look at 3 core patterns, straight up, straight down. Number 1, cup formation. Number 2, arch formation. Number 3, you can mix 1 and 2 and 1 and 3. If you mix 1 and 3, you get this H pattern. We call it the dreaded H, means it comes down sharply, arches over, fails, takes out the left side low. If it's a deep pullback below that low, you can go 1 to 1 or more to the downside. And here we are. This is the second time we're doing it in just a couple of weeks. And we're rolling over. And you can see the 9-period moving average is expanding. The MACD has just gone back to negative. The relative strength right here is pulling back, and the stochastic is flat at the lower level. Now, that's going to be very important because from here, you start to anticipate there could be some kind of a low. Interesting. Okay. All right, well, we don't want to get too carried away. So this is the H pattern. We call it the dreaded H because if it goes sharply below the left side low, you've got to anticipate something even worse, but we haven't got there yet. Now, the 200-period moving average in the weekly held for that big rally from the 36,661 level, but we're giving back some of it, and the technicals here in the, let me just move this away. The technicals here in the weekly chart are all very poor. Look at the weekly chart. The weekly chart so far is hell. Now I can go to this chart that I wanted to show you. The week still has Wednesday, a week to go before we wrap up April. This is where we are. So you can see that in the monthly chart, the green 9-period moving average, we've arched over, but it hasn't turned pink. To get this to turn pink, I think we'd have to retest the low that was made just recently and probably go even about 500 or 600 points lower than that. So this is a work in progress. We've still got the whole month to go. In this particular market, a day is a long time, let alone 1, 2, 3, 4, it's about 6, 7 sessions. All right, let's get back to our story. I don't want to lose focus here. S&P is down sharply. S&P is down 102 at 51.79. I just need to ask my engineer if everything's okay there because I am hearing a buzzing. Not bad. Okay. Okay. We're still okay. I can work that out. I just need to keep my volume down a little bit. So the S&P is arching over. It did go from a peak A, and that's still an A, and that'll become a minus only if it goes under 5062.25, the low of the 7th of April. But look at this weekly chart. That weekly chart, it's going to be very important. This particular green candle, 51.83 right now. I would say that 5100 to 5090, that area is just key. It's once the S&P starts to arch over and take that out, we've already done a minus 17% to the low that was made on the 7th. Usually in a very deep bear market, and who knows if this is going to be a very deep bear market, you make at least a 30-something percent, 32%, but actually the history of these major sell-offs, if this becomes with the monthly chart, if that becomes a major sell-off, usually you get 50 to 51% sell. I don't even want to think about that. So we prepared for subscribers. We've raised a lot of cash. We do have some long positions. I'll briefly touch them every once in a while. But in the meantime, the core long positions from much lower down, we've kept at least a little bit of those positions because I want to be there if there's a sudden sharp turnaround that gives you a counter trend rally that's about a 28 to 30% upside move. It's a possibility. We just have to wait for it. I'm going to go on and go to the QQQ Index 100 trading vehicle. Gaps down from Friday's low. Gaps down to the, it's at 434 right now, down almost 10. Arching over, this is that rectangle formation, which also produces the dreaded H, the H pattern. But most importantly, we are getting close to the left side candle low. That's really important, and that's the candle low of 432.63, and that's the low of the 10th of April. Now, I haven't mentioned any upside. At this particular point, the upside is limited to a bounce, maybe to touch the lows of Friday, but if you can go above that, I would say just into the lower part of the candle of Friday in all of these instances. I'm going to go to the IWM. So the Qs are down 2.25%, but the IWM is only 1.55%. It's down 288 at 183.59. You could say it's holding better. Now, I'll talk about that I'll talk about right now. One of the things about the Russell 2000 is that very often throughout the last 2 years, let's say, when we've expected the Russell to continue higher because it's holding well, all that happens is that on a comparative basis, the Dow, the S&P, and the QQQ are pulling back very sharply, and the IWM, whether it's because there's been so much selling, I don't know what it is, but the IWM, the Russell 2000 ETF, small caps, holds better for a moment, and then it pulls back. It doesn't mean because it's holding that it's going to lead the way to the upside. I was asked last week, is it time to look at the IWM for a long? I said, we have to hold off. I don't see any reason just yet why the IWM should be a leader to the upside. I'd rather have it being a follower initially to see if it's going to work. Let's go on. We're going to go to the XLK. XLK is the S&P Selects Spider Tax Fund. That went to peak A. Now it's arching over. It's down 4 let's call it 5 at 187.90s. Weekly chart went under the 200-period moving average, and now it's still above it. But I'm a little bit more. I haven't yet put a down arrow in the monthly chart. I have to wait, but certainly it's a sell mode even in the weekly charts. Let's go on. We want to look at the SMHs. Now this is going to be important because the SMHs are down 3.2%, one of the bigger percentage losers, down 6.37 at 186.11. It's arching over a little bit deeper than the others, and that just says to me, well, that's the one that you've been talking about for years and years, decades, as the leader of the markets. Up, the leader of the markets down. It was failed. It didn't get to the high of 283.07 from July of 2024, not a year ago, but about 8 months or so ago. And it's not doing very well. It's just not doing very well, and that's really important. All right, I've got a break coming up. I do want to go to the different areas of gold and silver. I do want to I'll do Bitcoin as we're about to go to the break. Bitcoin is up sharply, up 2760 at 87,870. We kept down most of our position. The others we've taken quite a lot of, not so much for IBIT, but not much at all in the gold position we have. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. I'm just writing something down here. Yeah, I'll get to it right away. So we're looking at Bitcoin. One of the reasons why I was saying last week that it looks to me like Bitcoin, and I was mentioning this when I was interviewed by Jacob last week. I said that it might be, we don't know yet, but there are hints that the dollar, did I type in the wrong place? Probably did. Let me just type it in here. Yep, I did. DXY, the dollar is under tremendous pressure. One of the reasons being, I think it goes all the way back to 2015 or so when Trump was talking about the dollar. He would like to see the dollar weaker. Well, since then it's had huge moves. Well, you get in the dollar weaker. That's a very important component of what we're looking at. And we have actually taken, we're out the dollar finally. And we've been in it since 2018 from 90s, run it all the time, a little bit off all the way in the UP to almost as high. And then we've left it there. There are a number of reasons. I don't want to waste time on the reasons why, but we're actually out of it. I did it for two reasons. One is, I think the dollar is under tremendous pressure. Therefore, the upside is going to be limited for a while. And the downside, at some point, there'll be a reason to get back into the dollar, but I don't think it's right now. So I needed to space on my newsletter in any case. And we want the money. I mean, to have it just sitting there, it's silly just to keep doing that. It's been really good, but not great. Okay, so with that said, what I am looking at is you've got the Bitcoin, that there's a chance that Bitcoin could be a lot of big investors now, not just because I think it's become legitimized. Bitcoin, I don't think people are talking about is it going to losses. Yeah, it's there. And now the Fed, everyone has to deal with it. That's all there is to it. So I think that Bitcoin has become a much more legitimate instrument in the whole financial field. Bitcoin futures continuous contract doesn't stay forever. I have not a clue. I don't think anybody could have a clue. But what I am saying is, I just needed to see that email. Yes. What I am saying is that in the interim period, during this period of flux where we have no clue as to what is going to give the market some stabilization, this is an area that I think money's going to, at least for now. The weekly chart's got a lot of work. I had said if the Bitcoin can start to trade in the 87,500s, preferably in the high 88,000s. And then on a closing basis for the weekly chart, we see that 9-period moving actually from pink to green, meaning that the 9 flips to the 14, over the 14 to go positive on a closing basis. That's another thing altogether. So, okay, that said, I look at the EUR, USD. This is the euro going to a leg D in both the daily chart and the weekly chart. Just on a very overbought situation and on an oversold situation, I don't want to get carried away and say, oh, I think we're getting to a really tradable low. What I am saying is there are a number of factors that I look at for market turns, and you don't know the severity of the turn up or down, but you know that the instrument, the thesis that's promulgating and pushing the theme to go higher or the theme to go lower is starting to run out of a little bit of energy. I'm seeing that starting to appear. That doesn't mean to say we couldn't test the lows in the Dow. I'll show you right now, just real quickly. Look, that's the arch formation. There's the daily chart. 36,611 was the low on the 7th. That was a heck of a move. Look, 36,600 to 40. It was just under 40,800. Yeah, 40,791. That is a big move. All right, so we give him back. That's just used up time. It's stalled, and that's very important. I just want to check. Yeah, the Chapman wave trend gauge is showing nothing. Doesn't overbought or undersold, nothing. All right, so that's the euro in leg D. The high that we're looking for is somewhere in the 1 point right there. The next area of resistance will be 1 point. Wow, that's a little high. Let's go to the doji candle. The doji candle of the October of 2021 with a low of 1.169 and sorry, that's the high of 1.169 and a low of 1.152. So 1.152 would be the next level of resistance, and we'll just go one step at a time. The technicals are still very strong in all categories. That's daily, weekly, monthly. Let's go to the USD JPY. You'll look at the opposite. It'll be like the dollar. Yep, there it is, a lower low today, going straight for the 200-period moving average of 139 and 139.56, trading right now at 140.65. Yeah, that's just continuing lower. There's the dreaded H. We've already got a daily chart and the weekly chart, and that says there's a real good chance it'll take out 1.39 at some point over the next week or two. That's something else I'm missing. I did that. Okay, here we go. Gold up 104.7, really strong. I've got this. Remember, I said everything about it. I have to consider that it could be a new leg B. I'm giving it the alternate count in the Chapman wave, but the stochastic is the 93%. I just have no choice but to call this an up arrow. This is a buy signal, maybe even a buy mode in the daily chart, continuing leg D in the weekly. And look at this. I had this one-to-one move, a technique I developed a long time ago. I don't use it that often, although it seems to work quite a lot, but I use it when I'm kind of in limbo where I don't see a fib number, I don't see anything, but I use this from the low that was made, which will be, oops, let me get the pointer. From the low that was made in this trough right here, going, that's in 2015, to the resistance high, and that high was the high. Of course, this is a continuous contract, so the price changes, but the high of September of 2011, I give you the high that's written right now, that's at 2,489.7. I always do a measured move from those. So that measured move is right. So it's from, there's a lot of notation here. That's because this isn't automated. I have to do it by hand. I have to lift up each one of these notations here to say that's where we are, because either it gets split, but in this particular case, it doesn't get split. It just gets reconfigured, smoothed out, so the price changes. So this expansion that went from the low to the high, I've done here, and that took us to right there. And that takes you to 3,432, give or take 3 or 4 points, right? What's the high today? 3,442.3. So we've almost achieved the one-to-one that I look for. This is like a dreaded H upside down. It's like the reverse Y. And that was the extension that I was anticipating. Was a possibility, but I didn't expect it to be all in one shot, except that the nervousness, as I said to my subscribers, there's just so much tension going on between the tariffs, the result of the tariffs, the counter-trend tariffs, and just everything going on, that you can see that businesses are really afraid to do anything right now. Even if they're good results, you can still get slammed to the downside. So that just makes gold such a very opportune place to be in. It's insurance, it's everything, it's doing what you want. So we've stayed long this, it's done extremely well. I want to look at silver. Silver's trading right now up a little bit more than it was. 32.81, it's up 34. It hasn't even made a leg B yet, so it's kind of lagging. I just want to do GDX because I had questions about that. Yeah, I've got this here again. Do I call this a brand new B or is it F/B? Looks to me like it's a new leg B to the upside. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hello. We're back. Basil Chapman, Dow's down 730, S&P's down 106. Yeah, not good at all. Okay, so what we're looking at is the GDX. Now, this one, I've had to give it an alternate count. I need to do it because as a demonstration of a technique, I need to tell you where there's a little bit of insecurity that everything that I'm looking at points to something, but there is an alternate count, because if you're not aware of an alternate count, you can do serious damage, right? Because if you get broadsided, it means that you weren't aware that there was something else possible. So here we are. I'm calling this a leg F/B. Everything about it says it should be a B. It corresponds to what we're looking at and all the others. I should put in an up arrow. I'm going to wait for the end of the day to put an up arrow in. And that says it should still go to a C and a D. This is the GDX Market Vectors Gold Miners ETF. So look, the stochastic is flat at 92%. What more do you want when you're bullish? That's what you want. On balance volume did pull back, and you've got to pull back just a little bit. The MACD is still expanding. The histogram, yeah, look at that histogram, the vertical lines. The 0% line is still expanding. The relative strength index is good. It did pull back a little bit, but it's still really good. The 9 is way over the 14. The price is way over the 9. I have to tell you, I'll be close tonight. I'll probably just put an up arrow and say I might be wrong, but it should still go to a C and a D. It doesn't tell you how high. We use other things like that measured move that I had before. I use other things for the expansion or contraction, but I'm not doing it right here. What I am saying is, well, first of all these fib numbers just gone. Okay, you got your cup formation. This is a Chapman. I thought I had it written in, but I didn't. This is a technique that I developed a long time ago. I wonder if I should just reinstitute my CD and put it into another form and just whittle it away. I think that's what I might do over the next 3 months or so. And just because these are techniques that are so valuable, I spent decades, and not hundreds, but thousands, not thousands, but tens of thousands, as you know, of charts working on these different techniques. And I should do it a little more formally than that. Look, this is called a Chapman wave overlapping wave. And what happens is, it's called a Chapman wave cup and ladle breakout pattern. And what that says is if the price makes a cup, kind of a V or a cup formation, and starts a brand new bicycle that goes to peak A and then maybe a B, if it snaps through the left side peak, D, E, or F, a major top that was made, that becomes a Chapman wave. It's not a cup and handle. Cup and handle is when you go back to the previous lip and you pull back a little bit and then you break out. I don't like that pattern at all, because the price always goes back into the handle or lower. This is fantastic because when it breaks out, it just goes straight through. Well, it went to peak A, and the peak B went way up into the 46s, and then it pulls back, and now you've got leg C. I got it as F/C, but it's really, it looks to me like a leg C in the weekly chart of the. So let me just type it in here. It's called, I always put that in there. I'll make it gray, so it's just kind of in background. Chapman wave, cup, and ladle. Why? Because it looks like a ladle. You know, a ladle just goes straight through. Gravy. Goes straight through to above the left side lip. And then always say cup and ladle to at least D. Well, and then I usually make it in gray, so it's just sitting there, and I recognize, just like I do the Chapman wave flat base unconventional restart. There it is. Okay, so we've broken it out. So I like this, and there's a leg E in the weekly chart. This is the place that money is going to. I from the look of it, it tells me that within about a week or so, we might finally start to see something different. But at this particular point, no. And now let's go to the question I had. Was it Harmony? Someone was looking at was it Harmony? No, HM. No, HL, Heckler. Okay, I don't think I've looked at Heckler for a while. Yeah, Heckler's, you see, not everything's moving. Look here, HL is Heckler Mining. Went to that peak D and then pulled back very sharply. And now it's at peak A, B. By a penny, it made leg C. You see, this is a very important. I'm sure Tommy O'Brien will talk about this every once in a while. He's mentioned it, but even in something like his gold report, which I haven't seen, but I'm just guessing that he's got some stocks that are just broken to the upside and others are just stalling. They're just not getting there. So that's my point here. And what I've been saying to subscribers is that this is such a selective rally. If you're able to get something in an area, usually I say, don't go for the one stock in an area that's just about that the sector's looking terrible. This is one of the times where you actually want to go there because money's flowing into what's very successful. That's as simple as that. All right, so that's not working very well. Heckler Mining now needed. Oh, could I look at the FXI? Absolutely. FXI is this is the iShares China Large Cap ETF, down 11 cents today, 32.30. I have to tell you, although it's the same kind of pattern, this is holding really well. You would have anticipated, because with the tariff talk and all that, I think China's playing its hand here in such a way that the market is holding pretty decently. It's just stuck in the middle of the range. It's not breaking down yet at 32. If it goes back under 31, 37, the 200-period moving average, then you've got your dreaded H. Then you can expect a test of the 29 area, or maybe even 28.5. But at this point, it is holding well. If you look at FXEV, why am I going to that? That's not a symbol. XPEV. XPEV, that's the Xpeng Inc. designs and develops, manufactures smart EVs. Yeah, it's pulling back, still holding pretty well. If you go to BYDDF, this is the one that I said is the largest builder of EVs in China. It's done very well. It's the only one that I would consider, if you're going for a Chinese stock, one that I think has the potential to withstand a lot of battering if there's selling pressure. But there are other things to go for. I'm just looking at it and I'm saying. All right, but that said, you've got to look at UVIX. UVIX, here we go. So in the UVIX, you see it hasn't moved very much. It's up 3.75, up 6.6%. But really, when you look at the chart pattern, that's nothing at 59.63. It was at 105.18 on the 8th. It slumped down the next day to 44.42. This is volatile. And here it is, at 59.69. That's what I said to subscribers, especially my overview last weekend, on Thursday afternoon, before the Easter weekend. I did my overview and I said, this is very interesting that you haven't got the SPXS 3 times short. Yeah, it's moving today. This one's saying to me, as a trade, these are very nice, very quick trades. But as a position player, I think they're getting closer and closer to a very oversold condition in the general market. I might be wrong. That's what my thinking.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I was asked for some time now if anything pops up on my screen list in the under $10 area, just to mention it, and they would, a couple of people, and they would do their own homework, but they would just like to see something that's moving up while everything else moving somewhere in a different direction. And let me just tell you that concrete pumping, BPCP, has moved above its rectangle high, and that I think is quite important. I'll just talk about it in a brief moment here. So there's your up arrow, and there's your peak A, and there's your peak B, and then it goes into a rectangle formation. Really important. I have webinars on the rectangle, large rectangle, narrow rectangle patterns. I consider them to be as important as anything, as any fib number, anything that you have, because they tell you something that's going on that gives you very, very strong parameters to monitor. So what it's done on a closing basis for 3 sessions now is closed above the spike high that took you to, didn't take you, but it did take BPCP. What did I say it was? Concrete pumping, something or other, to 614 on the 18th of March. Then it came back, but held the left side low. That left side low was 458. Was it 478, right? And it held it. Now underneath it, look, this is your starting point. So this is where you count each successively peak. So hold on. There we go. So that means that's an A, that's a B. There's no A until you get another A right there. Gray A because it's under that B. A gray B because it's under that B. Now, overlapping C says that there's a really good chance you're going to get to a D. Stochastic is at 95%. The MACD is good. The on-balance volume is holding very well. And the 9 is over the 14, and the price is over the 9. Interesting. So this is trading at $6.19, up a penny. And it doesn't tell you how high, but it just says, wow, this is holding really well above the 200-period moving average. Yes, and I think it will go to a D. So as a trade, I think it's really good to go to 627. It's trading at 619 right now, and then we'll deal with it. I'll put it down. I'll come back to it. BBCP. All right. Who knew you'd find something on a day like this? Okay. Next thing we want to look at is I did that. Yeah. So the IAI was a question about is the broker-dealer ETF, the IAI, telling us something? Well, it's telling us it's in a sell mode in the daily chart. It's in a sell mode in the weekly chart. The monthly chart is holding really well. So this is telling me that either this market has a long way to go before we make a real bottom. That puts me into that 38 to 51% correction area, but I have to wait for the end of the month. So I'm saying just at this particular point, it's holding really well. And if the market continues down, that is, if I do get a sell signal, I haven't got even a sell signal in the weekly chart, a monthly chart. If it gives me a sell signal, I can anticipate the 9 will go under the 14. That'll take it to about 108. We're trading at 130 right now. The on-bounce volume is very weak. Oh, that's unusual. Stochastic is over. It's just on 80%, 79%, 79.49. MACD is still good. So this tells me that there is still buying. Well, if there's still buying, and we've still got to resolve a whole bunch of things with the tariffs and all, that takes time. So the crash thing, and I've been saying for a long time, I don't see this chart formation in either the daily, weekly, or the monthly as replicating the patterns that I look at for the crash of 1929 and the crash of 1987, where you had basically speed immediately. Just you had a couple of weeks of sight, and boom, the crash. That decline was, Black Thursday they talk about. That was just intense. It just took money away from people, so that when there finally was that big rally of 40-something% that came going into the April high of 1930, the money there was just either short covering or it was just really tough. And the next decline just took all the money away, right? It was depression. I'm looking at something pattern-wise. That's all I'm saying. Let me just go back to the S&P because that's what we have to be looking at. Look at the S&P monthly chart. Very sharp decline. Is it crash material? Month is still young. Anything can happen. Yeah, it could. If you look at the Dow, the Dow weekly that double top is completely different to the Dow, to the pattern in the weekly chart of the 1929. And so is the sideways consolidation in the monthly chart. 4 months going sideways before you break down. So that's what I'm saying. The result might be the same. I'm just saying that the pattern I'm looking at is somewhat different. And that says to me, I've got to look for something different. Let's go back again. So IAI, and you can see that. Look at this on the weekly chart. Big green can, and it's holding quite well when you think, well, the week's young. We haven't even 1.25 hours into the first trading day of this shortened week, of this week, I'm saying. Well, all I can do is just say to you, let's go to Goldman Sachs. The Goldman Sachs, that from 672 with a 662 open on the day that it made the high of the 18th of Feb. Yep, there's your dreaded H. Is this going to become another one? Well, so far it's holding pretty well. Look at this. There's not yet a one-to-one to the downside in the weekly chart, but it's in a sell mode. And the daily chart 9 is still way over the 14. So either we're looking at a lot of time or we're looking at something that is just day by day. We can be looking at 400-500 points in the Dow, 100 points in the S&P. That's something, that deterioration, that is something very serious because there's really no place to hide. And as it stands right now, I'm looking at this and saying there are signs that just on a very short-term basis, we've got to be prepared. Doesn't say we have to do it. We've just got to be prepared that there could be some, I don't know what it could be anymore. We've kind of run out of themes, but a raised eyebrow, right? Something, whatever it is, to have a pretty decent counter trend rally to the upside. That's really what I'm setting us up for. I got to be ready for it. So let me just, another question came in here. Let me get to that before we go to the break. KOPN. KOPN. Now, I remember the KOPN? KOPN. And it's written very specifically. Yeah, there it is. Okay. So Copen is Copen Core. Yeah, but look at that monthly chart. Dreaded H, and it keeps testing the base. And look at the weekly chart peak. A, B, C, D, E. and then it comes all the way down in this pyramid pattern, straight up, straight down, almost an Eiffel Tower. And look at the daily peak, A peak, B peak, C. Yeah, on a very short term. Wait a minute, it's trading at 0.93, 93 cents. I don't know how much you want to put into this to be able to get a really big bang for the buck, but this is not the time to be doing that. Is it going to go higher? I agree. It's holding really well at 0.93, but I wouldn't get carried away. Just make it a small part if it becomes a nice percentage winner. But this is not one where you put 200,000 shares expecting to go from 90.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, I just did a little work on this. Copen, C-O-P-E-N, I put I-N. Core, more specifically, Copen Core, that's what it is. It's a public traded. I do remember seeing the name a long time ago, and then I just forgot about it. I even remember notating it going up to that, going up, but I don't think I got to the top near the 13 area. However, I completely forgot about it. Develops, manufactures, and sells wearable technology, including systems and components like OLED, displays, optical lenses, and ASICs. I don't know what that is. The company has been innovating wearable VR and AR technology since its inception. They also specialize in micro displays and applications. I remember our late friend. Wait a minute. Dave. I remember Dave White talking about this, but I don't remember exactly what he said. It was also when I was just fresh into the word OLED, There's a different display. All right. So I'm just saying that this is something right now in this environment. It's got the right story. It's got the right everything. Well, why is it trading under $1? If it's a great company, it should be at 100. So all I'm saying is, yeah, as a trade, I think this is quite nice, holding well. But in this environment, don't overdo it. That's all I'm saying. Okay, let's get to this before we wrap up, because it's very important. This particular phase, this particular move to the downside today, look here in the Dow, especially with Friday, UNH just tanking the Dow. I thought it was a one-off where the Dow would be down weak and the S&P and the QQQ would hold quite well. They actually did pretty damn well considering, but Sunday night, they just all tanked. And then there was a rally, quite a nice rally, and then it just was terrible. Even early this morning, there was a rally to down minus 100 in the futures, and then it went down minus 380. So I'm saying, be real careful. You don't have to be carried away on the long side. If you find something that looks intriguing, I wouldn't put too much money into it. But if it works, it works. You just want to be accumulating some money rather than unaccumulating money. Just be really careful. And as I said, Bitcoin seems to be working, dollars working. So gold is working, dollars not working, and euro is moving higher.